Morning, everyone.
Hey, good morning, Dave.
How you feeling?
Oh, we're better now. Thank you.
That's good. Glad to hear it. Chicken soup.
Say that again. Chicken soup. Exactly.
Never fails.
Let's see. You're seeing this screen, right?
Yes.
This one's moving chart here. Perfect. Okay. I'm sharing a different screens for different resolutions, so we're testing this out.
Yeah, actually, that's really clear. At least on my computer.
It's not my really big screen. It's my normal screen.
Yeah, it's not bad.
So we'll get our chat going here. Morning, Mike. Morning, Keith. Morning, Asham. Daily troublemaker. Just kidding. How you guys doing this fine morning?
I have a chipmunk running around on my deck outside my office door. I'm watching it. He's like scavenging for food or something.
Well, we got warm weather coming your way, Dave. We'll do our quick tidbit. We got 80s coming the rest of the week, and so you should see it by the weekend.
Oh, nice. Actually, we've had a couple of really nice days in the 70s. It was a little bit warmer yesterday, but today we got rain. Good. Thanks for the weather report.
Well, welcome, Brian. Happy to have you here.
Hey, Brian. Always good to see new people. Excellent.
Asham, did you take a trade at all? Were you in either way? Andre, good morning.
Down at the open. Good morning, Andre. Down at the open up today, and but see, you see the volatility in the 5-minute. That is because we're transitioning. I put a note in the TSA alert this morning that it looks like over the past several days we've been transitioning or trying to transition from a negative bell curve to a positive one, but we got, I think that's the reason why we went up yesterday. But we're getting to that point now. We've got the number one in the first column of the binary trend. We're down to -1 on the bell curve, but we haven't turned positive yet. Today might be that day. So we'll see. If I'm taking a swing trade here, very kind of early. I really would like to see the bell curve go to like a +1 or +2 before I get in. But the binary trend is positive. That X factor and the FT column there was a -2.67 the day before yesterday, and that sometimes triggers a positive trend. I've been keeping an eye on that. So
is this X factor any related to the other X factor we've seen, or is that completely just coincidence that you named them both X?
Yeah, I think it's coincidence because
okay. I assume so.
Yeah, formulas are completely different, but I don't know what to call it. So I just call it X.
Perfect. Okay, I thought so, but I just wanted to confirm.
Yeah, I guess I could change it to Y just to avoid confusion.
Well, I had a very similar thought as you just mentioned, seeing this last night when I filled in the numbers. I said, "Ooh, we're coming to a point to turn." So I actually took a swing trade last night.
Oh, nice.
And I exited it this morning actually when it was up. So if I come back here, I pulled it off right around here.
Yeah, we had a nice upward movement in the overnight session. Where's your 4-hour chart?
Yeah, we'll bring the 4-hour over to the screen. So yeah, nice move. I actually went to bed around here because I was up watching it. I'm like, oh, we'll just let it keep going. I just used the micros, so nothing crazy.
Yep.
But it was a nice move, and I woke up this morning down a little bit, and I said, okay, we'll watch it first, see if it retraces. So yeah, I saw the move here, and I said, we'll take that. That'll work.
Yeah, good. Excellent. Nice job. Nice job. Misham says, took a try on the micros for $6 loss. Could have stayed in longer, but wanted to hit the trading room now. Close up the trade. We're more valuable than the $6 loss. That's very encouraging, Misham.
Welcome to our world, Sean. Close the trades before we got to talk.
Yeah. Saw the up move, but was a bit hesitant to take it. Wanted to try swing trading trades when the scripts were released. Yeah, so I think that I don't know if you have those loaded yet or not, but it's showing a negative trend on the 4-hour chart for the new scripts, the ARB crossover. Yeah, the ARB crossover has been negative now for quite some time, and I keep expecting it to go positive, and it hasn't done so. And that's the only reason I'm kind of hesitant about taking a long swing trade.
Yeah, I saw it before that arrow popped up, so I had this. We closed. I was like, oh, we're taking a nice turn here.
Yeah, that was
this happens. I'm going to be a little stinker.
Yeah, absolutely. But you can see that thread running through the crossover there has remained negative much longer than I anticipated it would. And but I'm encouraged to kind of see on the daily, we got that number one in the binary trend column.
Definitely.
So maybe that is going to push that ARB crossover into positive territory. So, but for a 2 to 3 day swing trade, I would wait until we get confirmation. I think today we need to close positive on the bell curve.
Yeah, get some positive numbers in here. Get a 1 or a 2 or something we'd want to see.
Yes, exactly. We need to see that, I think.
So Brian wants to know, what's the dot mean right here?
That just means potential trend change. So when it gets to that point, it's like, hey, be alert there. There's a possible decline coming. And we did get a couple of bars there on a 4-hour where it declined. That's all it is. It's just saying, hey, the previous signal was down, but, that's probably dead now. We're probably going to reverse trend.
Just like we saw back here, we had a down signal. Says, oh, dot, yeah, the down signal's probably canceled down and went higher.
Exactly, yeah. And those arrows, by the way, are trend indications. They're not trade signals. Those are trend indications. So they're just kind of alerting you to what the trend is. And then the dots are the potential reversals of the trend. You're welcome, Brian.
So I know we had those couple questions, and then I had a few people asking, the Nurag, are you in? He is in. Hey, Nurag, how's it going? He had emailed a couple questions, so thanks for sending those in. And for those that haven't seen, if you do have questions in the meantime, shoot them over and we'll answer them in these sessions in addition to anything you have live. So Nurag's asking about when the TSA recommends, down at the open or down around the open in a trade down, or it says up at the open, trades up, when do you look in? Or when do you actually want to enter those trades? And I'll move the 4-hour back out of the way. And what we're looking for there, Nurag, best case scenario, and I had an email, another one on this, I forget who it was. They were talking about atomic entry, so this will kind of cover multiple birds with one stone. Is optimal is to enter when the bell curve has no longer exceeding the opposite direction of what we're looking to take the trade. So say, for instance, we have a up at the open, up on the trade, alert, signal, whatever we want to call it. We're looking for the oscillator to be, if it does go negative, it doesn't have to, but very commonly it will because it oscillates, right? Like we see here, down, slight up, down, up, down, up. The atomic entry is when it no longer goes in the opposite direction, like we could either say here or here, would be an entry point. Then you would watch the 1 minute and the 5 minute in conjunction. At least that's what I do. That's what I teach my private clients. There is no one only this one, some people have tested like a 2.5 minute or a 2 or a 3 minute chart just to kind of, so they don't have to watch one. But as long as you're watching these and they're going in your direction, you can stay with the trade. The 1 minute can be fluctuating, whereas the 5 minute is the holy grail. If it retraces half of your bar, you definitely need to protect your profits and get out. So if we're in here and we're long, this is profit, this is profit. Before this bar went past here, you're getting out, right? So entries are when it no longer goes in the opposite direction, it starts going the way we expect, entry point. Exit point can be either when we hit a 0.3 on the fifth column on either a 1 or a 5, or you just hit your profit target. You don't have to get every single ounce or every single penny out of the trade. If you keep doing that, you're going to go crazy and you'll be balder than I am. And you just, be happy with what you need. So I think rolling back to a new Rugs question of down at the open, trade equals down, is where do you make that trade? So around the open can be a few minutes before or after the bell. Very helpful. Good. I'm glad this is helping. And then, so if they're both, up and open, up and trade, you can actually enter that before the bell rings, depending on what the risk is. So for a 1, 2, maybe a 3 on the risk, that's where we're more able to enter the trade prior to the bell, because we have high confidence in what's going to happen based on probabilities. If we're a 4 or a 5, we're probably not taking the trade, or we're waiting until after the bell to see what happens. If we have that, opposite move where we have up at the open, down trade, where we see the pop and then we take the trade. So it depends on what it is, and that's kind of how it all works together on the timing aspect. Andre says, what if it's down and open, up at trade? So that's where we would say, looking for a move down around that open again. It doesn't have to be this, or let me come over to the 1 minute. It doesn't have to be the 1 minute bar after the bell. If it says around the open, it can be either or before or after. There's no exact science there. We have seen it move before the open. We have seen it move after the open. So whether it's that, so if we say down at open, we're looking for a down move around that open, and then we can enter the long trade if it's up at trade.
Yeah, right there is where, you want to look at the bell curve. So if the bell curve is trending down and then we start to see a tick up on it, you got your down move and your signal for a long trade. Right.
So like right here could be an example where it's down. Not don't take into account this, but just say here's like what the bars are doing on the oscillator. We get a down move, then this one completes. This would be your entry point for up at the trade. Then you can take this.
Yeah, I prefer a well-formed bell curve on both sides. Excuse me, if we're down at the open, I want to see something that's fairly well-formed, and then starts to tick up before I take that trade. And especially when I see the 2 bars on that, on the 1 minute, it's much better. But you could also see it on the 5 minutes, totally flat. Totally flat on the 5 minute. Not at the same time period, so it's like 8:40 your time.
Oh, 8:40?
8:40 your time, yeah. So that flat bar right there, are those 2 little bars on the 1
These little
minute.
guys?
Yeah. That gives me an indication that, hey, we're stopping, the trend is stopping, there's no more momentum to the downside, and we see an uptick in the bell curve. That's the trigger, for me anyway. Those little bars, I've always mentioned this, those little bars always give me an indication the momentum is terminated at that point. And when I see the bell curve starting to tick up, that's where I want to go and take the up trade.
And so we see the opposite right now where it's actually getting bigger, and this is moving down. So this would be the opposite of what Dave just described.
I wait for those little bars to form. That gives me a good indication that the trend, the momentum on that side of the trade is stalled out.
So the more time that you have doing this,
Thank you, Anur. Nice little comment.
Appreciate that. I wouldn't recommend it until you get comfortable with it. Like if it's the opposite where it says down and open, up at trade, don't try and take both sides of it. I mean, you can if you think you're some rock star. I don't know. I don't even hardly ever do that. But
I don't do it either. No.
it's that's super advanced, and someone that has just gets click happy. I don't know.
I would not do that. The only reason that we put the bias at the open is so you can watch for the bell curve oscillator to form that negative bell curve. And once that negative bell curve is formed, and it's within 10 minutes of the open, so 10 minutes prior or 10 minutes after, so you can watch for it. So if we didn't tell you, hey, right around the open we might go down, but the trade is up, and we never mentioned that the trade could be down at the open, and you're going to take a long trade probably at the wrong time. So we wait for the open because that's where most of the move is in that first 15, 20 minutes, half hour. And if we know that it's going to go down, then we could take the long trade based on that signal.
So Mike says, do you defer to the ARB oscillator at all for entry or exit on the atomic entry? I do not. I purely use the ARB oscillator as a measurement of profit and loss. Dave might use it a little bit differently, but I don't focus on it other than, I just see what it's doing, but I don't focus on it for an entry or an exit.
Absolutely. I would not focus on an entry with that. That is purely measuring of the move. Remember, 0.5% is the average move for the pair for YMNQ. So when it gets around 33%, which is 70% of that 50%, 0.5% move, when it gets down to like 0.33, that's when you want to start looking to take profits and be very alert at that point.
That's why these lines are drawn at plus -5 or plus 0.05 and 0.05 here. Not that we're going to hit on a 5-minute chart, most likely. It is potentially possible, but most likely not. But that is where those come from. Andre says, so really you want to trade the trade and not correct. The trade is what we're looking for. If it says up at open, up at trade, yeah, that's where we can be in before or after the bell. If it says up at trade, up at open, down at trade, we're trading the down at trade. We're not trading the opposite at the open or around the open. And I probably said that way too fast. I'm trying to work on that. So yes, the trade is what we trade. Does that make sense? Did I say it too weird?
That's okay. I think that it's just the point that the open bias is the
good, absolutely clear.
Yeah. So we want to make sure that we're alert at the open to take the trade.
And then the whole time, look at this fun action we got going on.
Yeah. This is pretty interesting. Big, wow, on the SDs yesterday, big decline. I saw minus 5,000 on the SDs yesterday on the YM, on the NYSE in the exchange. Big institutional sell order. No offsetting orders. There were a few on the later time charts, but or on a couple of the other selling that appeared to be institutional selling. But nothing big, and it's so it's carrying over to today. Very interesting.
I had the 1-minute charts open there just to watch it live, but I'll go back to the 5, which I normally have it on.
Yeah.
I did a little bit of scalping this morning too, just because I like it. I saw these signals come in, both here. I took part of this little ride down, just like Sean was saying. I had to close up before I had to talk, so I took a couple shorts. I wish I would have let them on. No.
Yeah, well, anytime you have a profit, take it.
Absolutely. The numbers are great, so I'm happy.
Yeah, absolutely. Yeah, let's, I don't know, I'm going to open it up. If you guys have any questions about the market in general or anything about, really anything, I guess we can open up the topic for anything. I'd really like to hear from you guys. Any questions that you have, and it can be on any subject, not just volatility arbitrage or the market in general. It can be on anything.
Sean did send in the one question, Dave. Did you see that where he was asking how the work, if we're doing anything on the total market spreadsheet?
Yeah.
Now that we have the micros and looking at doing all four.
Yeah. Didn't I send that to you?
I don't think I got an updated one. No.
I did it. I didn't send it to you, I guess. So, all right, I'll send it to you. I apologize.
That's all right. Well, that's the answer, Sean. It's coming fast.
Yep. There was one thing, though, that I was hesitant about, and that was the fact that when you're doing the micros, the M2K, which is the Russell 2000 micros, you have to do 2 of those to 1 of all the other ones.
Right.
I think that's right. I was working on it. I had inputted all the data, and it was all set to send to you. And then I started thinking about this, whether or not we need to adjust for the fact that we need 2 M2Ks to 1 of the other contracts.
Gotcha. Okay.
Let me think about that a little bit more, but all the data's in there.
Okay. So yeah, wide open floor, guys.
Yeah, anything you want to talk about? Presidential elections, the weather, anything, any topics that you guys want to talk about? We're kind of open to. I think we should probably do that once in a while. Let's just kind of open it up, let you guys talk, and Stan and I do a lot of talking.
Yeah, we can absolutely open some mics. So if you guys got questions, I can unmute people. Except for Bob. I can't unmute Bob. I don't see a microphone.
We need to do an in-depth video on total market. Just review the last video on it. Okay. Let's see how it works in conjunction with the new Vol 2.0 scripts. Yep. So for PCs for private clients, what's the time frame on getting those for those guys?
I think we were looking around July, the turn of the month, after the final testing will be out the door.
Okay.
So yeah, if you're private clients, you should be getting your hot little hands on the Vol ARP 2.0 scripts, which is these guys. The ARP volume, the ARP crossover, and the ARP signals up here. So look for those in July for private clients. They will not replace what we're doing, Andre. The 2.0 scripts are more for a swing trade. They're not going to replace the oscillator, the 5th column, the ARB oscillator, confirmation peak. Those are all still valid, but it's more for a day trading situation where these 2.0 are more for a swing trade solution.
Exactly. Yep. So if you're using the micros, yeah, you want to use those for the swing trades.
So it helps both versions of traders, Andre.
Yeah, take a look at the markets again because they're really looks like they're accelerating to the downside here.
And here's the indexes doing the same thing. MT vols coming up. Interesting how bearish herding's not filling out, but we're getting a big sell-off.
Yeah, and you got that on a 5-minute chart, so the bearish herding may not have really kicked in yet.
BOP curves coming up though on both.
Mm-hmm. Yeah, that means bearish herding is coming then.
Yep. Sham says, oh wait, what we got above that? Okay, clear, but they look pretty accurate, so both the morning trades and day trades. Yeah, there's nothing to say that I can't take these new scripts and throw them on. I have done this just for some testing myself, like a 15 minutes. Like here was a signal before the end of the day, came up and gave us a nice potential up signal. Or if I pull it, I'll do a 5-minute. Let's see, I think it gets a little bit too many signals when it go to a 5. Although we got a little trend possibility here. So I haven't even looked at these today. So yesterday, that's just too much noise for me. Again, these aren't meant to be take a trade because 0 shows up. These are the trends, so I don't use it on a 5.
Well, when I do look at the 5 though, if you want to go back to that just for a second,
sure.
Notice something as I've been testing it is that clusters of the arrows kind of give you a pretty good indication of what's going to happen. So, like after you had those 3 down trend signals, all of a sudden you started getting clusters of up signals. And those persisted throughout the day, even though there were a couple of downturns there. So if you see cluster after cluster after cluster of up signals, that's probably a pretty good indication we're going higher. And then in the overnight session, it did. It went up quite strongly. So almost like, let's say you add up, you got 3 down signals and you got 12 up signals. You know, it's a net positive, you know, to the upside.
Sure. And if we get really crazy, I've never even done this yet.
Yeah, I don't know if I'd look at a 1 minute. Although, yeah.
You never know.
You never
I
know.
turned you on to that 1 minute last year.
Yeah, I know you did.
Where's our latest? Look at all those downs. A couple ups.
Yeah, it looks like the majority is down at this point. That'll be interesting to see if that.
I find it interesting too where it draws it in. Like, why is this so high?
Yeah, you don't know why?
I don't remember off the top of my head. I'm sure it's something in your.
It's because we have the wicks off. If you had the wicks up there, that's where the top of the wick is.
Gotcha.
Yeah, that's why they're drawn there. I was trying to figure that out too. In fact, I had to zoom out because I said, "Wow, gee, there should be a down signal there." And there wasn't one, and I zoomed out, and it was way up above where I was looking because of those wicks.
That's interesting.
I wonder if there's any significance to that. Figure that out.
So, Nurek, I wouldn't use them yet when you get your hands on them since you are a private client, but test them out and look at it yourself. As we're talking about right here, it's not something I have done yet. I purely use them for swing trades only right now, but the more we test, the more we learn.
And on the 1 hour, it looks like the crossover is starting to go positive. We got green on the dominance and the crossover.
Yeah, overnight it was green down here.
Mm-hmm.
So Brian's been looking at all the awesome spreadsheets. He's got all the good stuff. I would say have you been through the VA Masterclass, Brian? Do you have access to that? Have you been through it? And he says yes for those listening and not reading. Have you completed all and working through it? Okay. Continue on that, I would say. And then whether you're mindfully able to paper trade like it's real money, start there doing the vol arb. Or if you need to have skin in the game, use the micros. So you're much less at risk since they're 1/10 of the risk. So start with micros on MYM, MNQ. And then I would say I would focus on that. Then once you get that for a potential morning trade, look more at and pay attention to the market timer videos around the premium indicators of these guys, or watch any of the videos that we've put together for it. I would say do that second. But focus on VA, because that is the bread and butter of what we use. And then once you get good at YMNQ, we can look at expanding to ESRTY later down the road. And then, opening up to just going long or short based on the intraday signals in the intra-trader script up here that works in conjunction with the BOP curves, the bullish and bearish herding signals, the ribbons, all of these kind of work together. I would do that second and not worry about that first. Vol arb is going to give you more confidence, and it also seems at the same time with just being one-sided. That's my words of wisdom, at least. I don't know if Dave has anything different for Brian. That's what I would focus on if I were you.
Brian, if you haven't done futures trading before, we highly recommend that you do the micros. And the symbols are different. Do you know what the symbols are for the micros, Brian? Also, we don't really have to go into too many details because we have the webinar from the CME up on the Tradingology member site. So definitely check that out. If you have not seen that, it's very important that you see it. Use the micro e-minis. Okay.
Both micros and regulars. Okay, good.
Have you seen that video, Brian?
The CME webinar. It is.
I don't know if that's in the main menu. So
it's called. How far back was it? Recording from CME Group webinar, micro e-minis. It was back on. Let me get the date here. It is in the left side. You will see it. I'll pull it over here in a second for you. Let me move this guy.
He says he saw it. I would definitely, I mean.
Oh, okay, good.
But I would definitely, kind of look at that again, though.
Yeah, it's always good for a little quick refresher, but yeah, it's the recording from the CME Group webinar. This cool guy. So yeah, check that out. That'll make sure you're up to speed on all that good stuff. And then if you also want, for background, if you haven't been through it, I would recommend going through the HLM 1 and 2 courses. Not to do exactly what they're saying in there, but it will give you a background on where this all came from and how we got to where we are today, and it'll give you a lot of knowledge around volatility arbitrage. It's like taking apart the car. It's like we've said, it's like rebuilding the engine, so you see everything under the covers of what Dave went through and what all the students went through to see where we got to. And the 2.0 is obviously things we've learned since those classes in 2017 and 2018.
And Jörg, thank you for dropping that link. I was just about to do that.
All right, Brian, happy to help and welcome. Mike says, is there a preference for using the Heiken Ashi bars or candlesticks? Absolutely, Mike.
Oh, yeah.
That's super important. So these need to be candle trend. No Heiken Ashis in the volatility arbitrage.
Yeah, no. Because what they do is the Heiken Ashis, as far as I understand them, do an average of the close and opens from the previous bars or something like that. So we can't use those because otherwise we're not going to be able to trade it in real time. Definitely throw you off.
Yeah, so that's why you'll see these differently. So in my charts that we pull up for the volatility arbitrage, those are all candle trend. And when I'm watching the regular markets, I just have the regular bar candles.
Yeah, I use bars.
Extremely important.
For those.
He says stick with group 2. Keith, you're all biased on group 2. Come on, group 1 was fun too.
Keith. Yeah, a little bit of bias there.
Keith is fantastic. I like it.
Well, it's kind of a funny story because group 1 came first, right? And then group 2 came second, obviously. Thanks, Keith. I guess that's a compliment. But I'll tell you the reason why you like group 2 better is because I learned what not to do in group 1. Group 1 was kind of my guinea pigs. And so after I taught group 1, I said, oh man, I should have included this, or I should have included that, or I should have said this, or I should have said that. So group 2 got the benefit of all of the things I didn't think of in group 1. So you're absolutely right, Keith. You probably should go to group 2 to listen. Yeah.
If you want to see the comparison, just watch them in order. Do like group 1, day 1, group 2, day 1, then just go back and forth.
Yes, absolutely. Yeah. I refined my presentation for group 2 using group 1 as the guinea pigs. Mark asks, what are your thoughts on market direction over the next few months? Well, I've been working really closely with the team at Strong Market for Market Timer, and we're seeing some disturbing trends, especially in the longer term signals. The long-term signal that market trend has been tracking turned down pretty sharply over the past week or so, last week and a half, I think. And every time it's done that, the market has declined very, very sharply. If you're a Market Timer subscriber, I actually did a video for their Insights weekly newsletter this past Sunday, and there's a couple of scripts. Number one, the long-term signal, of course, that I just mentioned, but then there's also what Dan was mentioning earlier was an X new column, a beta formula that we're using to measure weakness in the market, and there's a severe divergence right now between that formula, that algorithm, and the market. And every time it's had a severe divergence, the market has declined pretty severely. I mean, the last couple of times was January 2018, then again in February 2019, and of course we know what happened on both of those dates. The market for the next month was down severely. So that I can't get any better than that. I think the Market Timer signals are absolutely awesome. They do a great job, especially on the long-term stuff. Yeah, I think we're gonna and then if you look at a chart, if you can pull up a chart, Dan, of the Dow, it's a $ DJI on a daily. I mean, let's take a look and see where we are there. It is just huge. Keith, the video is in the Market Timer archive site. It's that archive site. The archive site password is in your portal. It's not the same one that you use to log into the portal, but the password is in the portal. It's a text file in there. You have to grab it and then go to the site to watch it.
I'm still I have for current.
Yeah, I mean, look where we are here. We've got a very strange looking that high right there that we just made, that new high. It's not actually a new high because we had the high.
It was really close, yeah.
950, but we're really close, but we couldn't break above it, and so we've got this potential for a double top. Now, if we exceed that 26,951, this is from the charting point of view. Okay, this has nothing to do with Market Timer at this point. If you look at the previous high, 26,951, if we break that, then we're definitely going higher. And, I mean, there's just no two ways about it. But we have gotten to the point now where we had such a sharp run up here. And if you do Elliott waves, you can see that it's basically a ABC pattern. It's up, one, down, and then up. And so those are always typically counter trend, which means that the trend has possibly changed already to a downtrend. Now, if we go into 5 waves on the downside, then that confirms that we're in a down wave. So we're kind of really early in that, but based on Market Timer signal, especially the long-term one, we could be seeing something maybe down below. Where's the low? 24.7 maybe. Yeah, right around 24.7. We could break that low. I think that's where we're going. And then there's a big low that we hit back in January, February. Breaking that low at 21.7 would be really, really bearish. There's a couple things about this market that are, of course, very, very strange. Number one is that we have been in an uptrend since 2008 or 2009, March of 2009, when the market turned around from the financial crisis. We haven't really had a significant decline in the market since then. That was 11, almost 12 years ago. 11 years ago at least. So this is one of the longest bull markets in history, number one. And then it's very suspect, of course, for why it's gone up because of quantitative easing, I would suggest. And so a lot of experts would also say that it's because of the quantitative easing that the market has gone up, low interest rates, easy to borrow for stock traders and so forth. And you can see, look at the volatility that we've really had since the beginning of February of 2018, January 2018. I mean, look at that volatility. Holy cow. It reminds me a little bit of, I don't know how far back it can go, but the high of 2007. Go back all the way. Yeah, see, it looks very, very similar to that high in 2007 to me. Oops, where did we go? Yep. And we dipped all the way from that point all the way down to 6,500. And so, you know, I don't know. We'll see. We'll see what happens. But one thing that you need to keep in mind, Andre has the next question. Oh, can we explain the uses of ribbons? Yes, we'll get to that.
We'll get back there.
One of the things about this market is that number one is what is currently driving, where is the money coming from in order to continually buy stocks? It has been corporate buybacks. So a lot of public companies have been buying back their shares, and they've been doing it for quite some time. Number two is very, very cheap interest rates. So low interest rates have fueled corporate, and some corporations not only have done buybacks with cash that they have on hand, but they've also borrowed money in order to do buybacks to boost their shares. When interest rates started going up a little bit, they cut back on that and they said they're going to stop their buyback programs. Well, if they cut back on their buyback programs, where is the money coming from in order to boost shares of stocks? And you've got 10,000 plus people retiring, baby boomers retiring every single day, and it's been like that for the last 4 years. Millennials are just starting to come into their peak earning years, and they're high 20s to mid 30s, and so but there's not as many of those as baby boomers. So there's way more baby boomers retiring, and eventually those baby boomers are going to start taking out money. They've only been retired for about 4 years, and experts that I've listened to and I've read. This is going to be probably the greatest wealth transfer in the history of the United States, with all the baby boomers retiring, passing away, giving it to their millennial children, and it could be huge. I mean, where are the millennials going to put that money? That's a good question. Are they going to put it in the stock market, or are they going to put it in Bitcoin? I think some surveys I saw recently indicated that they trust Bitcoin a lot more than they trust the stock market, because they were very young when 2008, 2009 financial crisis hit, and they saw a lot of their parents suffer dramatically from that decline. And this is the generation that's digital, remember. Bitcoin has gone from 3,400 just a few months ago to 11,300. So Mike says XRP. Absolutely, Mike. You are absolutely correct. XRP is #1 in my book.
There's Bitcoin up over 11K.
Yep, 11,306. I bought 2 of them in that paper trade when they had that up. And I'm up almost $12,000 right now. I think it was around 5,500 when I bought them on the when I saw that on the TD Ameritrade. And I actually have some, in reality in my real account, but I have a lot more XRP. XRP just bought 6% of MoneyGram, the international transfer company, and they have the rights to buy another 4%, so they could increase their stake to 10% in MoneyGram.
Yeah, last I saw they were at 47 last night.
Yep, they hit 50 50 cents just a few days ago. Pulled back a little bit, but when XRP moves, it moves like a rocket. Last September or September 2018, XRP was around 25, 28 cents. I picked up quite a bit of it at 28 cents. And within 3 days, it went to 70 cents. Whew. It was insane, the move. It was just like a rocket. And from everything that I could tell, it had to do with a couple of financial institutions just testing XRP. It was just a quick little test.
Yeah, thank you.
What about the Lightspeed system for payments? I'm not sure what you're referring to.
For Lightspeed, maybe he's referring to that.
Oh, maybe you're referring to the Lightning Network, you mean, for BTC, for Bitcoin, Andre? It's still very, very far behind XRP in the XRP ledger, that's for sure. There's all kinds of bottlenecks in the Lightning. I think eventually Lightning is definitely going to speed up payments for Bitcoin. Yep, Lightning, okay. It's definitely going to speed up payments, but in just over the last couple of weeks, when Bitcoin started moving up from like 8,000 to like 11,000, there were over 70,000 transactions that were way, way behind in the Bitcoin network, and Lightning could not help with that. And also, as far as a payment mechanism goes for Lightning, you have to have a pre-funded account in order to transfer Bitcoin from one account to another. So if you wanted to actually pay somebody with Bitcoin, the other person on the other end actually has to have some money on their node before you could actually send it to them. If they have zero balance, you can't send it to them. So there's I think there's lots of development work left to do with the Lightning Network, but when they get it right, it's going to be awesome. Yeah, I think it's going to be great. Because currently you cannot use crypto to transfer money cheap. No. XRP can transfer in 3 seconds, and it is incredibly cheap. There was somebody who transferred $38 million worth of XRP, rather. Took 3 seconds, and it cost, I think it was less than 5 cents. It was incredibly cheap. Very, very cheap. So I have transferred, I buy Bitcoin and I hold it only because I consider it to be like a store of value, like gold is sort of. But I buy way more XRP because I think it's going to be used internationally, and it's going to be the standard. They work with about 40 or 50 central banks. There's something going on with them. They're a private company, so they really don't have to disclose anything, but there's just a huge amount of support from regulators and central banks for XRP and Ripple. What was that transfer with? It was just XRP across. You can transfer. Here's why most people don't really get cryptocurrency, is because you can actually transfer. I can transfer money. I can transfer XRP from me to Dan directly without going through an exchange. I can transfer Bitcoin from me to Dan without going through an exchange. The only reason that you would want to use an exchange is if you wanted to cash out into USD. So you can, if you have an address for XRP, an XRP wallet, and Dan has an XRP wallet, I can transfer value directly to him, and it takes 3 seconds. Mike says a lot of the exchanges are not servicing a U.S. market, with regulators not being clear on future cryptocurrency. Yeah, the most famous one is Binance. Binance is one of the biggest exchanges in the world, and they recently said, hey, we're not going to be able to service U.S. customers anymore. The only ones that I have been able to use successfully is Bittrex. Unfortunately, I loved Bittrex. Bittrex was absolutely great. Unfortunately, they lost their application for a New York State bit license was denied. And so now I can't use them anymore, but I absolutely loved them. I just love Bittrex. I'm really disappointed. So the only thing, as a New York State resident, the only two exchanges I can use is Bitstamp, which was awarded a New York State bit license, and Coinbase. Those are the only two exchanges that I can use. Bittrex was a great one, though, because they had very high daily withdrawal limits, and they used Fedwire overnight money transfers. I mean, it was pretty awesome. Hopefully, they'll get their bit license back. And also, regulators not being clear on future. Regulators know what's coming, and the Token Taxonomy Act is now pending. Well, it's not pending; it's in committee, but it has been written, and they're working on it now. I'm really, really hoping that they pass that because it'll give a lot more clarity to the cryptocurrency space. I mean, Thailand has already passed regulations. Japan has passed regulations. Singapore has passed regulations. It seems like Asian markets are much more open and understand this technology better than U.S. regulators. I was listening to some regulators talk about cryptocurrencies, and I just cringed because they had no idea what they were talking about. It's kind of scary, actually. Had to move some coins out of Bittrex because, yeah. Are you in New York, Mike? Yeah, I had to do the same thing. No? Well, Bittrex has an international unit too, but Bittrex, as far as I know, still services states in some states in the U.S. It's Binance. Binance will stop servicing all U.S. customers in, I believe it's September. And I have some VET VeChain on there. I need to move it. Unfortunately, I use a Ledger Nano S to keep all my cryptocurrency, and but it doesn't have a VeChain wallet. I have to use. There's another wallet that you have to use. So anyway, also recently the FATF, which is the International Organization regarding money transfers, just came out with regulations. Well, not regulations. They don't do regulations, but they do guidance. And they came out with guidance on cryptocurrencies recently. And so the 37 members countries that they operate in were given the guidance, and they have to comply. If they don't comply, they get on a blacklist. So hopefully that will also be used as a template for U.S. regulations. Andre asked, what wallet do I use? I use the Ledger Nano S. It's a hard wallet, so it's offline. And you can go to Ledger. Is it ledger.fr?
They both work. You can go to ledger.com or ledger.net or ledger.fr. They all go to the same site now.
You sure? Because,
yep.
Okay. So if you go to Ledger, yeah. Ledger.com.
I did some investigation on that.
Okay, good. Because you have to make sure that you actually go to the right site because there's so many scams out there.
Buy on Amazon.
Oh, yeah. Oh, it's crazy. Yeah, you don't, and also you don't want to buy the Ledger on Amazon or eBay or something like that because it can be tampered with. And when you set it up, they can steal your passwords and stuff. So you want to go to
Ledger.com.
Yeah. I don't use the new Bluetooth one that they have. I think it's Ledger X or something.
Yeah, that's the new one.
Yeah. I don't feel
this one's fine.
Yeah, the Ledger Nano S is great, and I think it's like $49 now or something.
Yep, it's the same one I got.
Yep. Okay, good.
$59. There you go.
Yeah, 59. Yeah, once in a while they have a sale, and you can get like 2 of them for $59 or something. And the reason you might want to get 2 of them is because if you have a lot of different cryptocurrencies, you can only set up like maybe 2 or 3 on each one, 2 or 3 different kinds of cryptocurrencies, because they keep the available space low on those hardware wallets so that scripts can't run on it and get hacked. Andre, so any practical use of crypto now or more trading of it? Absolutely. I think through now XRP is the digital asset, Ripple is the company, but Ripple works with SBI in Japan. They've owned a part of MoneyGram. And then there's an R3. R3 is kind of a connector of financial institutions and corporate treasuries around the world. They're absolutely huge. They have selected XRP as their first digital asset for settlement. So, and they are now working with Amazon. This came out yesterday. So if you have an Amazon account, not an Amazon regular account, but an Amazon AWS account, you can now start to build applications on top of that and use R3 as a settlement mechanism through XRP. So there's lots of a huge amount of practical use of cryptocurrencies happening right now. MoneyGram is going to be using XRP over the next several weeks. So if you go, there's 40,000 locations of MoneyGram stations around the world. You can walk into one. You can send money from US dollars that gets converted to XRP to the local exchange in anywhere in the world to have it converted from XRP into the local currency. See, the one thing about XRP is that it's a bridge currency. So you can go from USD to XRP to Philippines, what is it, pesos? I know Mexican pesos. I think they're Philippine dollars maybe. But you can go into practically any single currency from XRP using a local exchange now from XRP to the local currency. So very practical use of cryptocurrencies, yes.
And yes, it's incredibly cheaper than Western Union or wiring or anything. It costs like next to nothing to transfer.
Yeah, right now, MoneyGram is only charging 99 cents for 400 euros to transfer. Western Union is charging $29 or 29 euros. Big difference. And the reason is because their MoneyGram is using XRP now. Thoughts? Okay, last question, then we get to Andre's question about the ribbons. Thoughts with Facebook crypto? I don't know, it's a weird thing. They're using the consensus protocol like XRP does, the XRP ledger. And their white paper was, I think it was just fluff. I mean, it didn't say anything at all. I think it's great for adoption. I think once everybody said, hey, Facebook is getting into, it wants to create a cryptocurrency, everybody really paid attention to the space. And according to the CEO of Ripple, he said it was the best week they've ever had, because as soon as Facebook came out and said, hey, we're going to do cryptocurrency trading or create a cryptocurrency, all of the people that were working with Ripple thinking about doing a contract with them or doing a proof of concept or having contracts pending called them and said, hey, we're going to do this. So he said it was the best week they've ever had. So it's great for adoption. I think that as soon as it came out, regulators across the world said, we're not going to, this doesn't sound right to us. And now Facebook has to go before Congress on July something, I forgot, July 11th or 10th or something like that, to talk about what their plans are for this cryptocurrency. I can't wait to see that. I want to hear what they have to say. So I think it's very much up in the air, but it's good for adoption. But I don't like the way they have. I don't like the fact that the cryptocurrency is basically going to be a stable coin with a basket of other currencies to stabilize it. I don't think that's a great idea, but we'll see what happens. Isham, Dave, if there's time, can you explain this anomaly? YM on the SD is lower than on the NQ, but the spread is currently going up.
We might save that for the next one.
Yeah, we might say that for the next one. That doesn't necessarily, just because the SD on one on the NYSE is different than the NQ, doesn't necessarily mean it's not an anomaly. It just means that there's more money going into the NQ than the on the YM and the NYSE. That's all. It just means there's more. If it's a negative number on the SD and the NQ, it just means there's more money being taken out. It has nothing necessarily to do with the spread. The spread has to do with the prices, not the SDs. All right, so last question. We'll get to this real quick. Andre has a question about the ribbons. I'll let you take over because I can't talk anymore.
Yeah, I got to jump in a few too. So yeah, there is a few videos out there, Andre, but the way that we do the ribbons is it hasn't happened recently. Let me move this guy back some. Because what you want to see is kind of a spread when you're looking to go up or down on it, where they're separated from the white dotted line. So I'll go back a little bit historically. Like this one, you see how this is way lower? That's where we're expecting prices to go down, and it dropped at the open here. Not a ton, but some. But that's also taking into account what everything else was doing. So MT vol was very low at that time. So that's why we didn't also have a big down move. But the ribbons you're looking at, you want separation. And you want to see where these yellow dots are going. So you're going to follow the yellow dots. It's kind of like follow the yellow brick road. If they continue down, it's going to keep moving in that direction in conjunction with where the arrows are going. See how this one actually crossed the white, which is when the green arrow gets drawn in here. That's what's facilitating that move or that change. And we see it's actually going up at that time. So we see it crossed over, then there was a large move up. MT vol's coming down, or excuse me, the BOP curve was coming down at the same time. So again, we're looking at things to work in conjunction. So the ribbons is you do want to see separation. And I also do have overlaid the SD and STs from the NYSE. Dave explains the ribbon a lot better. I know I'm pressed for time because I'm supposed to jump. But that's the quick and the dirty is we want separation. Then we want to see the yellow dots continuing to separate. When they come back or when they go down, that's a sign that you probably want to get out if you're in like a long position because it's not going to continue up. And that's why we see a lot of chop happened here.
Yeah, when you have the SD and STs on top of those, you can't spread them out so you can see like the as easily in the ribbons. You can't see the changes as much, I think.
Yeah, I'll show you. I'll pull those out quick so you see what Dave's talking about there. I'll just remove these guys. Then save it again. Then you can actually manipulate this more. Like when you overlay it, you can't manipulate that part of the chart.
Right, because they're two different values, so they don't separate well.
Come on, drive me crazy.
And then what you want to do is you want to kind of explode those up a little bit. And typically, I only look at the green side.
Yeah, they're the exact same, so it's a mirror of each other, so you don't need to see both.
Yeah, but the only thing you would look for on the other side is the arrows. But if you have the green side up, you're pretty much good. So what you want to do is you want to look at the dots go from. If they're at an extreme level, that's a negative sign. So like that one is so far away from the ribbons that's a negative sign. When they fall back below the ribbons, then that's kind of a positive sign, especially if they're above the white line. The white line is the, oh boy. I don't know. I just call it it's basically a trend following. It's a trend following mechanism, like a moving average of the ribbons. And so when the ribbons are above the white line, then obviously we're in a positive trend. When they start to drop back towards the white line, it's an indication of a reversal in the downtrend. And when they're under the white line, that's a very negative sign. So what you want to do is you want to follow the dots are your first clue that the trend is going to change, because if they're too far away from the ribbons, then that is kind of like the signal that, hey, that's done. Like that one at the open right there, opened up way far away from all the ribbons and the white lines, the average there, and immediately reversed. So and then when they started to go up, they went above the ribbons, and then immediately it was so far away, then they started falling back towards the ribbons. As soon as they start to separate, you get that divergence between the dot and the ribbons. That's a pretty good sign that you're going to have a reversal trend. So, and right now, is this the current?
This is today, yep.
Yeah, so I mean, all the ribbons and the dots are below the white line, which is the average. So, unless the dot crosses above the white line, then we're probably going to continue to go lower because they're all below the white line at this point. So what you want to do is you want to follow the dots, and if they're way above the ribbons, it's probably going to go to the other side. If it's way below the ribbons, it's probably going to go to the other side, and just follow the trend of the dots, basically. See, like it had a signal on the upper one on the IntraTrader, just to your left a little bit, the last down signal. Yeah, right there. And you saw that the dot was also below the ribbons and below the white line. That's a pretty good indication that you're going to go lower, at least on the next time frame. And right now, all the dots are pretty much, I mean, they're all lower than the white average. So, unless it crosses up over that white line, we're probably going to go back down again. So follow the dots in relationship to the ribbons and to the white line. And when they separate too far away, that's a good indication that there's going to be a trend reversal. Hopefully that helps.
Yeah. And if you're in the long spread, take your profits. We had a hell of a move.
Yes.
And on that note, I do have to jump, gentlemen, so we'll see you on Thursday. I appreciate everyone's time. Thanks for coming on.
Yep, thanks, guys. Appreciate your time. Thanks for joining us today. Really great day. Dan, have a great day.
Yes, thank you, Dave. We'll talk to you guys soon.
Take care. Bye.
Bye-bye.